So basically, this is when you're buying a evaluation. This is what the screen's going to look like, and I'm using my funded futures for this example. So most of the time, I would get a 50K account, but if you're just getting started and maybe you want to test the waters, maybe you could get a 25K. But these are a little more difficult just because they have a smaller drawdown limit, which is just how much money you're allowed to lose before the account gets blown. And right now they do have a 50% off code. So usually the account would be 109, but if you use this code here, you get them for 54, 55 basically. But yeah, I like to use the 50Ks because the 25Ks are fairly new, so the lowest accounts they used to always have were the 50Ks. But basically, you buy this account and you have these evaluation rules, and basically your goal with this 50K account is to make the profit target of $3,000 before you lose a total of $2,000. And the way that the drawdown works is basically, let's say today's Monday and you make $1,000, your drawdown would follow that $1,000. So let's just say you have a 50K account, you end the day up, your account's at 51,000. Your max drawdown limit would be 49K. And then this is also a simulated account. So basically, you're not really trading $50,000. They're just testing you to see if you have what it takes to have a simulated funded account, which basically, once you get on the sim funded stage, you have to also meet these rules. Let me see, funded rules right here. So it's your max drawdown is 2,000 and drawdown mode. Oh, this is real time. I didn't know that. But yeah, it just follows it. And right here it says days to pay out. It's just a 1 day account. Minimum payout. Profit split is 90%. And buffer requirements is 2.1K. So the buffer is basically just saying that you have to make 2.1K before you're allowed to withdraw anything. But with this account, it's cool because if somehow you make over 2.1K in 1 day, they don't really have a consistency rule, which is shown here, which usually kind of sucks on some accounts because they make you stay consistent because some accounts they limit how much you can make in a day, which is kind of the downside to some of these accounts. But some you have to find like the right rules, and once you find an account with the right rules that makes sense to your trading style, then you're able to take advantage and trade the way you want to trade. But I mean, this account's good, and I like them because, as you guys can see, you're only investing really $80. But if you're consistent and you're able to trade consistently, you're able to withdraw, like it says right here, 500 daily minimum. I think I don't know what the max is, but yeah, basically once you make over 2K, you're able to withdraw daily. And here it does say there is a consistency rule on the evaluation phase, which is 50%, which just limits you from making over 1,500 of your profit target, because that would be 50% of the target, right? But yeah, if you guys have more questions about the futures, then I would be open to answering them. But that was kind of my quick little run through. And I think Steven was trying to get a code for this, but we'll see how that ends up turning out. All right, so I'm gonna stop streaming really quick. And I'm going to go on to the masterclass. My bad if I'm like talking fast, guys. That's honestly just the way I talk. All right, nice. So, hope you guys are having a good morning. So this masterclass is going to be about liquidity pools, and that's basically going to help you find where the market is drawing towards. So let's get into it. So what are liquidity pools? And then before I get more into it, if you guys have any questions, you guys could just drop them in the chat, in the stream chat, and I'll try to answer them at the end. But all right, so what are liquidity pools? There are two types of liquidity pools in the market: swing points and gaps or voids. Swing points are significant because they either have buy or sell orders resting on them. Voids are significant because there's a lack of orders at those points, so the market must trade back to fill those voids with orders before it moves in the direction it wants to move. So I'm gonna like show you guys some examples of those and explain what they are. So what makes a swing point? A swing point is a higher low in the market with the lower high to the right and left. So that would be the example here on the left, the swing high, and they basically look like peaks in the market. Or a swing low would be a low with a lower low, wait, with the lower high. Wait, what is it? Yeah, lower high to the right and the left, and that's basically on the right. So that they look like dips in the market. And honestly, look, so this is gonna be the daily chart here on the right, and you guys could see this first. I can't use my cruiser. Oops. I can't use my cruiser on this, but this first little orange circle, that would be a daily swing low. If you guys could see how it's like a nice dip, looks like a V. And then that next swing at the top, that would be a swing high. So what swing points hold significance? When I look for swing points, the ones that I pay attention to are when they're stacked, or I like to pay attention to session swing highs and lows, and I like to focus on swings between the 1 hour and the daily time frames. Just because anything below that, the market doesn't really, not that it doesn't respect them, but it doesn't, they're not as urgent as these higher time frame swings. So let's go to the next slide. So this is an example of stack lows generating liquidity, and this is going to be the same chart on the left that I had on the previous slide, and this is going to be the same chart but on the 1 hour chart. So as you guys can see on the 1 hour chart, that same swing low on the left is that same swing low on the left on the daily. So when I'm looking at the daily, I'm focusing mostly on this daily swing low, right? But now that I zoom in to the 1 hour chart, I'm able to find these other swings at the bottom. As you guys can see, I have them highlighted in orange. And if you guys can pay attention, like from left to right, it gives like sort of a stepping stone like pattern. Like this one on the further left hasn't got taken, and it's like a stepping stone. If you guys see the second one, that Thursday low, also hasn't taken that previous Friday's low, and this closer low also didn't take that Thursday low. So that just shows me that that's all generating liquidity and waiting for the market to run it. So let's go toward the delivery. So notice how the market ended up running to those lows. And yeah, the market does push like through them, but you really just want to focus on where you're able to calculate the market going. Yeah, it kept running, but I'm not really worried about that. I just want to take the piece of the pie that I'm able to get. And right now, we're mostly just focusing on targets and not really like on entries. But there was definitely like some type of entry within that. Depends on really your trading model, but there's definitely some type of opportunity in that dip. This is the same chart. My bad, I had to get some water. But yeah, so that's just mostly focusing on these stack lows, and I hope that you guys are able to see how they're stacked. Basically, starting on the left to the right, it's like a stepping stone. That's really what you want to look for. So this is how to find session liquidity. So to find session liquidity, you mostly want to check the session kill zone times and mark 15-minute swing highs and lows. And then the session kill zone times, I'm gonna mark them out here on there. Well, they're marked out here on the right. So you just want to maybe mark out the highs and lows of each session at those times. And I do have an indicator that I use, so I don't really have to check every morning. It just marks it out for me, and I'll make sure that I link the indicator I used in the chat. But so yeah, for those swing highs and lows, I mostly just look for the market to draw towards those highs and lows. And most of the time, the market either reverses or pushes through those highs or lows. But a lot of the times, those highs or lows are traded towards, and they're good to find. They're good to use as targets. So here I have an example of the London low, and then also if you look at the top, this orange little box, that would be the Asia high. And a reason that I really wasn't paying attention to that was just because we are making lower highs, as you guys can see. So at that point, I'm kind of bearish. And again, there will be, this is mostly on just like how to find targets and kind of telling yourself where the market is drawing towards. So there will be a masterclass on finding entries later on. But for right now, we're just focused on the targets. And look how the market ended up drawing towards that London low. We also did end up pushing towards that New York AM low, if you guys can see further to the left. And that would also be the previous day low, so that also holds significance. And like I said, there will be some type of entry in those these down close candles, but you just want to focus on the targets for now. So what can we consider a void in the market? We can consider new day opening gaps or new week opening gaps that have not been traded into as voids in the market. So the new day opening gap is just basically, I'm sure you guys know, but when the market closes at one price and then gaps overnight up or down and just leaves a big gap in the candles, right? Same thing with the new week opening gap is when, I don't know, something crazy happens over the weekend and we just gap up or down and we just leave a big void. It's like no candles traded to or anything. And I have an example here. So this was actually this Monday, and I did take a trade from this, and I'm pretty sure, I think a couple of you guys traded this. I think Steven even traded this, but I also have an indicator for this, which is, I'll link the indicators I use at the end of the video. But you guys can see this blue box. That's the new week opening gap. And when I see stuff like that on Monday, I'm mostly focused to that, but not all the time will it get traded back to on Mondays. But you want to keep an eye out for that, and definitely have that marked out on your chart and not get too, like in this case, I would say not get too bullish because there is that huge void. And I'm sure you guys have heard of like all gaps get filled and like that term in trading, because I know a lot of people say it. But again, there was definitely some type of entry here. I'm pretty sure I did trade this. And a lot of the time when I trade these, I'm gonna go to the example. A lot of the times when I trade these, I don't look for the whole gap to get filled. It did in this example, and also did take that swing low at the bottom, which is the New York PM low. But I would personally just focus on mainly targeting just like the start of the gap, just because I don't think they'll completely fill all the time. And you don't want to, like I said, you don't want to get greedy. You just want to take that piece that you're sure, that's what it is with trading. You got to take what you know is going to hit. And that's like what this whole thing is about, trying to find where you believe, where you can find the market drawing towards. So how could you apply this to your trading? So what I do is, before market open, I ask myself, do I have stacked lows or highs? Do I have my session liquidity marked? Is there a new day opening gap? Is there a new week opening gap? And you just want to mark those on your chart. And then every morning, there should be an obvious liquidity pool. Like every morning, like when I send my biases, that's what I'm literally sending. I'm sending you guys this, and I mean I'm still gonna send my bias and stuff, but I want you guys to be able to mark this on your charts on your own. And then if yes, find an entry to your marked points. And that could be, I know a lot of you guys trade VWAP or EMAs or something, but have those points marked out and just see how the market draws towards them or reacts from them. And then if there's no like obvious liquidity pools, then honestly, it's all you have to do is not trade. Like if it's not obvious, then you don't have to take a trade. No one's forcing you to trade that day. And then another thing that's really important is once your marked points get taken for the day, just stop trading. Because a lot of the time, like I noticed it pretty early on, like you'll mark these points and they'll get taken. And once that happens, the market just consolidates all day. And you don't want to get caught up in that consolidation. You just want to take, the thing I like to say is you only have to be right once. And that's the point with these little draws on liquidity. Like you only have to find one a day. And after that, like you're just gambling, in my opinion. But and another thing is, if you have targets on both sides, it's honestly best not to trade or let market build structure to support one side. And that's either like maybe pushing, getting closer to one side, and then maybe taking an entry from like, while it's leading to that drawn liquidity and kind of invalidating the other side. But I mean, yeah, if you guys have any questions, you guys are welcome to ask. I also did want to go over the trade that I took yesterday because I want to show you guys my thought process on how I was able to find my drawn liquidity. And let me just open up TradingView. No questions? All good for now. Okay. But were you guys able to like pick up on it? What I was kind of trying to like explain and like kind of how to mark your points? Yeah, I'm gonna go over my trade from yesterday. Yeah, Loki, honestly, I would recommend just 4 hour swing points are really good also. And just you just have to look for ones that haven't been traded to. That's a big thing for me. They have to have not been traded to. All right, I'm gonna stop streaming and then I'm gonna go on TradingView really quick. But honestly, I think the 4 hour like when I'm trading intraday, I forgot to mention. When I'm like intraday trading, I love to focus on mostly 1 hour or 4 hour swings. Can you guys see my trading view? Yeah, I like to focus on 4 hour and 1 hour swings. Those are really important. And for like higher time frame bias, I like to use those daily swings. All right, so this is a daily chart. Alright, so I'm gonna go back to 9:30, 9:15. I'm gonna go to 9:15. So this is 9:15. This is what I'm looking at pre-market, right? So I'm gonna show you guys what I do. So going into pre-market, this is what the daily candle looks like, and I see that we have this swing high marked up here. Shoot, what the heck? I tried to draw on it. Didn't work. So I'm looking at that swing high, right? And I'm telling myself, how am I gonna find a trade into there? So that's just from the beginning of the day, that was my target. And I did also send in my channel that I was looking for higher. I was looking for higher on NQ, but ES ended up being the stronger asset today or yesterday. So now that I found my higher time frame target, I'm gonna go on the 1 hour and I'm just asking myself like, what other targets do I have on the 1 hour? So right here, I'm looking at this London high, which would be another session high. And then now that we have that, remember these are stacked highs, right? These are now stacked highs. Oh, well, that would be over here actually. These are stacked highs. So now, at this point, I'm just looking for a long entry, and that is whatever whatever model you trade. But in the morning, go back to the 15-minute. We didn't really give anything. We did displace to the upside, but we just ended up reversing. And if you guys could see again, we left this high, the London high, and now we have another like a staircase, right? Staircase effect. And this is gonna be more on the next masterclass, but we did tap into this 4-hour fair value gap, which is a place that we want to see a reaction from. So go on the 15-minute. Just gonna let the market play out again. Like another reason I didn't like shorts was because we did leave these stacked highs, and if you guys look on the 1 hour, like remember I'm looking for like swing points. So like this next swing point is all the way down here. I don't really feel comfortable trying to catch this whole move. Maybe if it was down here somewhere, then maybe I would want to look shorts to here if the setup presented itself. But I'm not gonna try to short from all the way up here to down here, like or even down here. Like that's kind of crazy. But so yeah, at this point we also did tap into this 1 hour gap, and we're gonna stay on the 1 hour for now. And like you guys can see, I don't know I think you guys call this doji candles, but this is a big like a reversal sign, right? So now we're just gonna keep playing the market. And honestly, I wasn't really paying attention to the market like that around this time. But I think I started looking around here. But I started seeing that okay, I did also mention the 1 hour, it did look like this is a reversal, right? And then we reacted perfectly off this 1 hour gap. And we have these draws on liquidity up here that I've been wanting to trade towards all morning. So now I'm looking at we have these down close candles here and we just start closing above them, right? We're just disrespecting bearish candles and opening up. If you guys can see here, this is a 5-minute fair value gap. I do have it marked out here. We're opening up bullish gaps, closing through bearish candles. So once we close through these bearish candles, that's when I decided I was like, I'm gonna enter. And remember, guys, I did mention these stacked highs, right? So now at this point, I'm just trusting my model. I'm accepting my risk, and I am just letting the market do what it wants to do. Look, market tapped into this fair value gap, reacted perfectly. And at this point, you're just let the market does what it does. And I did end up closing a little early, like around here, because it's Friday. I really didn't want to risk it. I was confident with my targets, but like I just didn't want to stress about it anymore. Yeah, that would have stressed me out, like bro. And there, the targets got hit. And yeah, that's basically how I found my targets and was able to stay confident with them. Or there's a word that traders be using. What is it? Convicted. I was really convicted with these highs. And after that, really, I'm not. I mean, the market was closed at this point, but after that, like, what more do you want? Like, you're able to predict where the market went, and it was pretty clean targets. Like, basically used everything that I mentioned in the little PowerPoint, except the new week opening gap. But yeah, I just I love trading towards these stacked highs. That's kind of like the best thing that you could look for. So it was 1, 2, 3 stacked highs, and it was also a daily high. Anytime the market is close to like daily highs like this, you wanna definitely lock in and maybe try to. I would even say size up when it's like days like this where there's like beautiful swing highs like this close by. Then that's when you want to trade. Like with good risk. And I honestly look, you see these swing highs. Look, honestly, the daily, I'm like really bullish right now because we have these daily stacked highs. This is all-time highs over here, and we're close to these highs. So I think we did reject a little bit at the end of market. Yeah, I think we did. But I'm really bullish with this 4-hour chart. We do have these swing highs up here. Also, these swing highs up here. But yeah, I just want you guys to mainly focus on targets for now, and then in the later master classes, I will get in more in depth into like entries and stuff. But this is just a little sneak peek into what is coming in the next one, and that's going to be mostly about these fair value gaps and how you can pair that with the draws on liquidity to help you find better entries. But yeah, let me see. I'm gonna try to find. I'm gonna just go on gold real quick. Just I haven't really charted gold in a minute. I'll just go right here. But that way I could try to find some live examples. So yeah, I usually like to start on the 4 hour. This thing looks kind of buns. Honestly, gold looks really bad right now. It's just consolidating. Yeah, I would stay with. I wouldn't even touch this. Yeah, I'm not touching this. I mean, I guess look, if we can try to plan this out, this will probably. I'm just showing you guys how I would mark my levels right now. I would maybe start on the. You can start on the weekly too, just so you don't have to mark so many. Yeah, literally just like that. Sorry if you guys can hear my washing machine. Yeah, honestly, gold is kind of buns right now, guys. I would stay away from this. Yeah, I'm good off gold. But yeah, let me know if you guys have any questions. I do wanna. I was talking to Steven about it. I wanna start like maybe doing like daily recaps on my trades, like just how I did right now, and kind of maybe help you guys explain my thought process daily, and maybe you guys could ask live questions and kind of review your trades with me live, and kind of I could explain why or why not the trade played out. I know sometimes some of you guys trade different strategies, but I'm hoping you guys could kind of incorporate this kind of stuff into your trading. And yeah, I mean, I like trading this way because it's just this is what makes sense to me. This is what I ended up. This is the path I chose when I started trading, and I mean, it's worked out pretty well for me. Just because I don't know, I'm the type of person that's like kind of technical, and I like to know why the market does all these little things. But yeah, I think that should be it. If you guys don't have any questions. Nice. I'm glad to see that. Yeah, and I want you guys to like yeah, definitely try to incorporate this to your trading. And this is just how to find targets really, but like Portia said, you can definitely use this with VWAP. And a thing that I would say is really important is once you find a target, like don't marry your bias, but kind of always have that in the back of your mind. Like maybe if the like just like yesterday on Friday, I'll go back to the chart. Um Yesterday I was bearish in the morning, but I mean I was bullish in the morning, but like you said, like what you saw, we ended up just dumping crazy, and that was just setting up for an even safer trade sort of say. It's like we were able to get this trade, and usually I always say I only trade the morning, but this was one of those days where like the framework in the PM session was just too good to pass up. So yeah, let me see. Go back to Discord. Honestly, I mean, the thing is, I I didn't know, bro. Like I didn't know. I just you have to have these things kind of marked out and see how the market reacts. You can't try to guess or try to predict the market. You have to react to it. You know, like I wasn't like the thing is I wasn't trying to catch shorts down here. Like if you guys see my trades, like I didn't catch them. I'm not trying to catch the bottom. I want to catch where my setup performed like presented itself, which was right here. Like that was like this was where my setup was. And that was already after the market was showing me that it was disrespecting bearish candles, you know? Like I said, like yeah, I could have pushed lower, but I wouldn't have tried to get in any of this really, in any of this dump just because we hadn't had a retrace. Maybe you could have found an entry down here, but that would have been invalidated once we started closing through these bearish candles. That's something I will get into in like a later masterclass, like these down close candles, because that's basically one of my entry models, which is the CISD. And yeah, yeah, I really didn't know it was gonna keep pushing. It was gonna reverse right away. I just saw that. What I really did like, and this is another concept that I will get into, was this candle close. I like there's like a thing that I trade sometimes. It's just basically candle ranges. And if you guys could see this candle, we ended up closing inside of this previous candle, which was just telling me that we're gonna use this candle's range and we want to trade back up to this candle's high. And that just ended up again being relative equal highs to these, right? And like look how all these highs ended up getting ran. I could have, like I said, I could have held all the way up there, but it was later in the session, so I didn't want to get greedy. And honestly, I'm sure like I don't really have the indicators on my chart, but I'm sure if you guys look on your chart, there's go on the 1 hour, there's for sure some type of EMA or VWAP or something right here. There has to be, like there's no way. You know, like that's why I'm saying like you guys don't have to try to incorporate every little thing into your trading. Like just do whatever makes sense for you. But because it all works. You just have to be disciplined and know when to execute and not get impatient. I'm sure like there's some type of reaction from something here. It's not just fair value gap, you know what I mean? And I'm sure there's also some type of reaction somewhere up here to like one of those indicators. But yeah. If you guys have any more questions, now would be time to ask. I also want to like not give you guys homework, but I want you guys to try to go through this week and mark out your those levels, and hopefully like we could check in and see how that's going. But I will be giving out my levels in the morning. I will continue to do that. What do you guys think about like trade recaps throughout the week? Nice. And I mean, I would definitely do them live, like this kind of style, so that way we can like get feedback, and you guys could like reflect on the market, kind of. Because honestly, that when I was like learning how to trade, that honestly helped me a lot. Because I was in Discord where they would do that, and that's kind of where I was able to ask questions. And yeah, nice. Yeah, that's when I was able to ask questions and really kind of reflect my thought process on the market, and they would kind of give me feedback and explain why something did what it did. But yeah. Well, All right. Well, I'm gonna let you guys go. But yeah, definitely, I will look into doing trade recaps throughout the week. It seems like you guys would be into it. I would probably. I know Loki, you're in like a different time zone, so I don't know what time would work. I would think like market close, but I know that's a little crazy for you. Are you guys like mostly East Coast? What do you guys think about lunch? Lunch works for me. Loki's right. I do trade early. What do you guys think about lunchtime? Yeah, I mean, yeah, we could definitely do lunchtime. Then, if somehow, some way, I end up taking another trade later in the day, like I did yesterday, then we could definitely go over it in post market or like power hour or something like that. But yeah, for now, I guess that's gonna be it. Hope you guys have a good rest of your day, and don't be shy. Ping me if you guys ever have any questions, and then I will. I'm gonna link my indicators. I'm gonna send them in my channel right now. Honestly, they're very helpful. I would recommend the sessions one and the new week opening gap one. Those are I only have 5 indicators, but those are usually the ones that I use the most. But yeah. All right. Well, you guys have a good one. Take care.